Most news recaps or weekly real estate blogs that you'll read today covering what happened this week will tell you that interest rates declined for the second week in a row, with continued improvement happening right now as Iran just declared the Strait of Hormuz fully open for commercial purposes. Stock market, mortgage bonds, everything's rallying on that news. We also saw that sales were down year over year from last March, but inventory is up. That is the surface level recap of what happened in the headlines affecting the real estate market this week. Of course, I'm here with more, so stick around because we're going to dive a little bit deeper to find out what's going on beneath the surface on all of this stuff. If you're following those headlines, you probably saw that the spring buying season 2026 is officially off to a weak start. Now, depending where you are in the country and whether or not you read this same blog last week, if you missed it, the major takeaway was there is no singular U.S. housing market anymore. You might agree that the spring buying season is weak. Or wherever you are in the country, you might think that's fake news because your local market is on fire. I'm not going to debate whether it's a normal or slow market because we've already established there is no single market anymore. And I am going to tell you this. This is a psychologically fucked market, actually. And this is what should be the strongest time of year. So let's break down all the facets of the psychosis of the current real estate market. Rates. Rates did improve this week. Not dramatically, but enough that we should have seen more enthusiasm in response. An increase in mortgage applications, maybe. You might remember that the last time interest rates improved a quarter of a point, I got 11 loan applications in a single day. And I'm just one loan officer amongst thousands. We should have seen an increase in showings, at least based on the improvement we saw over the last 2 weeks. We didn't. In fact, pending home sales just posted one of the biggest drops we've seen in months. Whether you're a buyer or a realtor reading this, you probably feel confused by this data because we've been told that lower interest rates will equal more demand. This week proved, for sure, we are not in a market that runs on that kind of logic anymore. This is also not a rate problem anymore. Bold statement, I know, to say that something doesn't depend on interest rates, especially considering for the last 2 years, most have blamed everything on interest rates. But if this was actually a rate problem, demand would have responded to the improvement we just saw. Spring is also supposed to be the time of year that really perks up realtors, lenders, the real estate market in general. It's the best time of year. And inventory has technically increased. Buyers have more options, so why is touring activity down at the same time that pending sales are also decreasing? Confidence is lacking. That's why. I've always explained things to you guys using supply and demand because truly none of this is really rocket science. There's no conspiracy. It's just supply and demand. But now I'm starting to see we really are in unprecedented times. Wouldn't you agree? So allow me to lean a little more dramatic today, if you will. Maybe we don't have a supply and demand problem anymore. Maybe it all comes down to a confidence problem. Have you noticed less buyers are asking, can I afford this nowadays? And more are wondering, what happens if I buy and the world actually ends? Kidding aside, buyers are asking different questions right now. Is this the right time? When, if ever, will interest rates improve? What happens if I buy now and prices drop? The economy shifts. More inventory doesn't really solve any of those dilemmas, does it? If we zoom out, the dilemma, as it probably always proves to be, is bigger than just what's happening inside the real estate industry. Real estate news was mostly good, as I mentioned. Lower rates, more inventory. Global news was mostly bad. Instability increased, oil markets became more volatile, economic signals were mixed. No, the economy certainly isn't crashing, but it's not inspiring much confidence either. And I will always argue that real estate decisions are just as emotional as they are financial. Also, I want to step out of my lane here for just a quick second to talk about pricing. I know that's a realtor's gig. They price the property to sell, or intentionally or unintentionally, they price the property to sit. I think it's a tougher job than usual right now because pricing is disconnected from reality. Sure, the house 2 doors down just sold 2 months ago for $700,000. We weren't at war 2 months ago, and interest rates were in the mid-fives if you were working with the right lender. So we're not in the same reality as the comp that recorded just 2 months ago. That's a tough pill for sellers to swallow, and that's why we're seeing price drops after listing. Not necessarily because the market is correcting or values are going down, just because it's a different reality right now. How you can win in a low confidence market. Here's exactly what you should do with the information I've given you over the past few weeks and why this blog is helpful. And I'm going to give it to you in 3 concise tips. Concise and precise. Stop looking at the market. Look for your pocket of opportunity based on your buying power and your time frame. Time frame is important. Then the graduated advice here is to identify pockets where homes are sitting and neighborhoods where sellers are caving and adjusting versus the ones where the listings are playing stalemate. Not checkmate. They're not playing to win. They're just staring each other down like a game of chicken. Let the record show, I thought that was a funny joke. I came up with it all by myself. But if you didn't laugh, then I'll just say the AI wrote it. Target almost good enough homes. This is my second tip. Almost good enough. The best opportunities right now are not the perfect home that had a packed open house yesterday and 5 other offers rolling in today. That's not the way you're going to get a deal. Search for the overlooked listings, even the ones everyone agrees are overpriced, and try to structure a deal creatively. And then the last bit of advice I have for you today, speaking of deals, win in the terms. This isn't new advice, but it's especially relevant right now. Price is not your only lever when it comes to negotiating. Sometimes it's not even the most important one. And from the borrower's point of view, I'm specifically saying borrower, not buyer, I think the smartest ones have been negotiating on price. Have not been negotiating on price. They have been engineering their monthly payments or their cash to close or the repairs. They've also been the ones who found out what was most important to the seller and made their offer attractive in that specific sense. So those are my 3 tips. Head into this weekend using them, and I'll see you next week.